If you're working in the dietitian or nutrition space, finance is not going to be your thing, like nor is dietitian or nutrition expertise my thing. So it's like you kind of, you stay in your lane, you do what you're passionate and really good at. So you should have an accountant who's on your side and really explaining your numbers to you so that any kind of tax bills, whether it's quarterly or, annually, don't come as a surprise. You should know well in advance of a lodgement happening how much tax you owe and why the outcome is the way it is. So I would say Bookkeeper is definitely a great place to start, but an accountant and a bookkeeper should really work together in order for you to get a comprehensive view of how your business is performing.
Hi, I'm Charlyn, dietitian turned business and marketing coach, and you're listening to the Nutrition Business Show. Hello. Welcome back to the Nutrition Business Show. Now, today we are going to be diving into a topic that I know causes a lot of stress amongst nutrition business owners, and that is the financial side of your business. Now, as a business coach, I often get asked questions by clients around business structures, taxation, and accounting. And I've been a business owner for 9 years now, so I know firsthand how confusing it can be whether you're starting or growing your business. Now, with June 30th and the end of financial year just around the corner, this episode couldn't be more timely. And that's why I've brought on Jenny Theodore onto the show to share with you some frequently asked questions that I often get asked by nutrition business owners, and also give you the confidence to navigate the taxation system so you can sleep well at night knowing that your numbers are handled correctly. Jenny is a chartered accountant and founder of Air Consulting, where she works with individuals, sole traders, and small businesses all across Australia. She is a wealth of knowledge and takes an educational and personal approach to working with clients, taking care of their bookkeeping, accounting, and payroll all under one roof. Now, if you're not based in Australia, don't tune out thinking that this episode is not relevant for you, because in there we talk about a lot of pertinent topics, which includes creating healthy financial habits and tracking your numbers, and that is regardless of where you're a tax resident. So without further ado, let's dive into my conversation with Jenny. Hey Jenny, thank you so much for coming on to the Nutrition Business Show. So happy to have you here.
Oh, thank you. It's so great to be here and to catch up with you.
Wonderful, Jenny. We've got so many questions for you from our clients, from our audience about tax and accounting and all sorts of things where it relates to taxation in Australia.
The fun stuff.
Yeah, the fun stuff. But before we go any further, would you mind introducing yourself to our audience?
Yeah, of course. So I am Jenny Theodore. I founded my accounting and tax practice, Air Consulting, about 3 years ago. And it really was to break down those barriers when it came to accounting and tax for individuals and small businesses. So I work with a range of small business owners in different industries and really trying to help them get that financial infrastructure in place, but also understand their finances and taxes better.
Amazing. It's such a complicated area, so it really helps to have an accountant who's got the patience to explain to small business owners what all the jargons mean. Jenny, you're originally from the Ireland, is that correct?
Correct, yes. So I moved here in 2012, which is crazy. I came out on a 1-year working holiday visa, never had any intention of staying, but here I am, 14 years later. And now married to an Australian and have sons together. So yes, Australia is now my home, but I love it. But I do try and get back home once a year if I can.
Yeah, that's wonderful. It's a beautiful place to live in. And as a lot of people know, Australia is a very highly regulated tax system. So for you coming here from Ireland, what were some of the biggest culture shocks for you and things that you had to adapt to in terms of the tax system?
Yeah, one that really stands out to me is just the level of control that Australians have over their tax return. I mean, for all of my years working and living in Ireland, I never really had to think about a tax return. So when you're employed, your PAYE, which is the equivalent of PAYG here, your tax return is just looked after. You know, your employer withholds your tax. You don't really look at it again. So you don't have a huge amount of control over your tax return, Whereas here, I mean, I feel like tax returns during tax time, it's like a national sport. Everybody is just talking about it. They're all into it between July to October, and people are very invested in it, which, look, I feel like there could be a middle ground, like a nice mix between the Irish probably relaxed approach versus the Australian just chaotic approach around tax returns. So yeah, maybe there's a middle ground, but that was probably the biggest culture shock to me.
Yeah, and everyone kind of sprints to the finish line as well. It's that deadline that everyone's, putting a lot of time into, which is quite funny to watch. But anyhow, I think, it's so important for us as business owners to educate ourselves so we know how we can, first of all, stay compliant. And secondly, make sure that we're doing the best that we can as a business to optimize our tax returns. So that's why I wanted to have you on here today. And the first question I really wanted to dive into is with regards to tax structure for the business. So a lot of dietitians, nutritionists that we work with, they start off with being a sole trader as a business. When does it make sense for someone to transition to being a company tax structure? And what's the difference in terms of tax amount, and what do they need to think about?
Yeah, so look, there's a number of elements to this. It's not really as clear cut of, is there a certain point when they should convert over from a sole trader to a company? Sole trader is absolutely a great starting point. It's the most simplistic structure to set up. I mean, you just get an ABN and you're good to go pretty much. It's definitely the cheapest structure and the least complex, really. So definitely a good starting ground if, someone is starting out as like a side hustle and not really sure if this is their, going to be their sole income source or if this is kind of a viable business. So a good starting point. But I would say, the pros and cons of, well, I guess the pros I've just covered around kind of the cost and ease of setup. The downside of a sole trader structure, the main downside really is, well, there's a couple of big ones, I guess. The first one being that you are then subject to individual tax rates, which we all know can go as high as 45% plus 2% for Medicare. So, you could be open to a 47% tax rate, which is very high on business income. Secondly, then there is the risk, or I guess the exposure for you as an individual. So when you're a sole trader, if there's any, I guess, liabilities or debts within the business itself, or any kind of issues, I guess, within the business, you as the sole trader and the owner of that business are financially liable for those. Whereas that is one of the big plus sides of a company, is that it's a limited liability. So what that means is any financial debts or liabilities of the business are limited to what's in the company, and you yourself as director are not personally liable, aside from, if you were negligent or something like that. So the other obviously plus side then to the company structure is that it's a flat rate of 25%. So you're moving away from those higher individual tax rates. So my advice generally to people is, if you're kind of approaching that, if we're to put a dollar figure on it, if you're sort of approaching that 100K mark, so like anywhere kind of $120,000 mark, where that's your taxable income or your net profit from your business, that's when I would strongly start to consider moving away from the sole trader structure into the company structure. Because that's when you're obviously going to get the tax benefits. But the other items like the asset protection piece, that's going to be there from day one. So that is a strong thing. If you own large assets like a house and things like that, or investment properties, I would be strongly considering a company set up from day one. The other thing you do want to think about is, if you are renting a premises, for example, like an office space to work out of, or if you have employees, then again, you're probably better suited with a company structure from day one rather than a sole trader. So it is quite a broad question. There's a number of factors to take into account.
Absolutely. And I think it's always really important to discuss your individual situation with the accountant, because they're going to look at your assets, how your business is structured, what type of clients you see, your income and things like that, so they can help you to make a decision. But thank you, Jenny, for kind of giving us the broad overview. And I just want to clarify as well, you mentioned around 100 to 120, and that's the net profit from the company,
Yes.
not the revenue amount. So depending on what your expenses are, it could be high in terms of revenue.
Yes, absolutely. So that would be the amount that you're being taxed on. So your net profit, exactly. Yeah.
Great. And there are so many things that's involved with setting up a company. There are things documents you need to submit and yearly upkeep as well. So just make sure you go through and talk to your accountant about those kind of things and see whether it's worth it or not. But Jenny, I do want to ask you about GST, which is a very common question I get. So are we as health professionals required to charge GST for health consultations? So we're talking about one-on-one consultations.
So again, it's a bit of a broad topic, this one. Generally, as on, I guess, medical or health advice or services, GST is not applicable. So they are GST-free services. There are a number of conditions to this. So the ATO on their website actually has a list of registered health services that qualify as being GST-free. So for example, one that's listed there are dietitian services, but nutrition, for example, is not listed as a GST-free service. In saying that, there are other conditions that need to be met. So if you are paying professional body fees towards, say, a dietitian, for example, if you're paying towards the association, that will also go in your favour. Or if you have qualifications and registrations in line with the bodies that the ATO specify as being under, I guess, their listing, then again, you will be that will be a GST-free service. So you really need to look into the ATO rules around health registered businesses and the GST implications of that, because they are quite specific and they do give a list of what will qualify.
Yeah, and that's good to know as well, because some professions like nutritionists, anyone can call themselves a nutritionist after doing like a 6-week crash course versus someone who's gone to university to do a clinical nutrition course. So there are differences. And again, if you're unsure, it's important to just check with the ATO website for Australian audience, just to make sure that you're meeting the requirements and making sure you're doing the right thing as well. So if someone's selling supplements or digital products, so if they're looking at, having a dispensary or supplements that they might sell as part of their program, would that be something that they need to charge GST for as well?
Yes, absolutely. So any like supplements, as you mentioned, digital products, ebooks, like packs that they're providing, online programs, they would all be deemed a taxable supply and therefore would have GST charged on them. So, in your business as, say, a dietitian, for example, you could have a number of different revenue streams, and some of them may be GST free, some of them may have GST on the income. So it's very important to, this is where I guess it's probably something we will talk about a bit further on, but this is where having, a good accounting software, a bookkeeper, an accountant on your side will really help make sure that your records are accurate, really, and correct from day one. Because, you don't want to kind of either charge GST on a supply to a client that shouldn't actually have GST applied to it, and therefore submit your BAS incorrectly and then have to amend it further down the line. So, there are complications where you do have some GST-free supplies and then GST-applicable supplies. But yes, absolutely, your supplements, your digital products, they would have GST applied to them.
Absolutely. And at what point does a business need to register for GST? Because that's different to a company structure as well. So can you step us through that?
So whether you are sole trader, company, partnership, whatever, I guess, structure that you're operating under, from a GST perspective, you need to register for GST once your GST turnover exceeds $75,000. And even though, say, your consultations, for example, may be GST free, they still count towards that $75,000 registration threshold. So just keep that in mind. As soon as your income, your revenue from your business, irrespective really of the structure, hits $75,000, that's when you need to register for GST. And it's, I mean, some businesses you can absolutely voluntarily register before that. And that is quite common for businesses to do for a number of different reasons. So some of the reasons you might voluntarily register before you hit 75,000 are if you have, like I mentioned there, if you're taking out a lease on an office property or a clinic property, and you have to do some fit out work on that, you know, you're going to be paying like electricians for materials and all of that, you're obviously going to pay GST on those supplies. So in order to claim the GST back on them, you may voluntarily register before you reach the $75,000 threshold so you can claim that GST back. Another reason why people might decide to register, a business might decide to register, is if you are providing a service that is business to business. So let's just say, for example, you are providing corporate consultations or corporate workshops to educate employees, then, you know, if you're invoicing a corporate client, it's going to look a lot better from a business perspective. You're going to look, I guess, from your own reputation, you're going to look like a more legitimate and kind of larger business if you're invoicing them with a GST invoice. So there are reasons why people would voluntarily register before that, but the threshold is that once you reach $75,000 in GST turnover, or once you know you're going to reach that level, you have 21 days to register.
Right. Okay. 21 days. So write that number down, everyone. I think that's important to know. Because I don't know if you can backtrack, you know, if you get towards the end of the tax year and recognize that, oh gosh, I'm hitting that 75,000 threshold, let's say right now in May, and we've got till the end of June. So what does someone have to do then? Can they backtrack and register now?
So it is based, so it's a bit different to say the normal tax year. When they're looking at GST, they look at the 12-month period, irrespective of whether or not it's mid-financial year. But to be honest, Charlyn, like a lot of small business clients I deal with, particularly if they're on the sole trader side of things, they're actually not really looking at their financial records until it comes to tax time, which, you know, that's where I'm kind of trying to change the habits of small business owners. But, you know, to have that visibility of how your business is doing throughout the year rather than just at tax time. So oftentimes people actually don't even realize they've exceeded that threshold until, you know, they prepare and lodge their tax return and I've flagged it with them. And at that point in time, you know, if you think about the wording of the ATO, it's from the date you knew you exceeded the threshold. So you're still okay to register at that point because you weren't actually aware you had exceeded that income threshold.
Okay, great. Thank you so much for breaking it down because I think that area is really confusing. But that leads us nicely into the next question. For someone who's starting out their business and they haven't registered for a business name yet, so it's just under their name, they're a sole trader, do they need to have a separate bank account, and what type of bank account it is? Because, you know, from my perspective, it's important to keep things clean so you know your income, your expenses, and everything goes through one account. So what type of account should they be setting up?
So yeah, so if it's a sole trader and they're just operating under their ABN, there's no legal requirement to have a separate business bank account, which is different to, say, a company structure where you must have a separate bank account. So no legal requirement to. However, I would strongly advise that you would set up a separate business bank account. And that can just be a standard everyday transactional account that even on your banking profile or banking login member portal, you can just rename to business account. It doesn't have to be any specific account. Normally, when you're setting it up as a business account, the bank will ask for your ABN. So they'll automatically treat it as a business account. But the reason I say it's best to set one up, even though it's not a legal requirement, is it will become an admin nightmare at either tax time or when you're doing your quarterly BAS return if you don't have an accounting system and you're just operating off bank accounts. Because what you would have to do is trawl through all of your personal transactions and try and isolate business transactions, and it's going to cost you a lot more if you engage a bookkeeper or an accountant to do that, because they will have to work through a lot more transactions than they would have if it was just a business bank account. The other reason it's very important to do that is because if you're mixing personal and business transactions, you have no idea really of how the cash flow of your business is actually I guess, how healthy it is. Because, you're just getting money in, spending it on personal expenses. You've no kind of visibility of how the business itself is doing. So even just from a financial performance overview, I mean, I wouldn't necessarily use your bank account to do that, but if you're just starting out and it's early days, having a separate business bank account will give you a good idea of your income versus how much you're spending and therefore your cash flow of your business.
Yeah, that's really good advice. And I think it's important as well to have a business bank account, especially when you need to register for payment processes, things like Stripe or PayPal, and have it under your business. They're going to ask for those documents anyway to prove that that is your business account. So I think, for most bank accounts, they don't charge extra for a business account as long as there's money coming in each month.
Yeah.
So correct. I think it's worth the effort there.
Yes, absolutely. Yeah. Yes. And most of them, particularly as a sole trader, it is different. Obviously, if you're a company, as I said, you legally need to have a separate bank account in the name of the company. But nowadays, if you're just a sole trader, operating under your ABN, whatever bank you're currently with from a personal perspective, normally they make it really straightforward to open a new account. Like I know even for myself, it could just be done online through your banking portal. Like you don't need to go into a branch or anything like that. So yeah, there's kind of no excuse not to do it.
Wonderful. Now, you talked a little bit about keeping things well recorded and streamlining your bookkeeping. So talk us through some systems that you recommend, especially for small business owners who don't have a lot of budget for subscriptions and things like that. What are some economical ways that they can use to track their income and expenses?
So, I mean, early days for a business, I would say doing it through Excel, and I might have other accountants be like, what are you saying? But
I did that early on too.
I mean,
I needed to make sure that the idea works first.
Absolutely. And that's it, right? You don't want to go, and particularly in the early days, you are quite reluctant to spend money because you're just not sure how it's all going to go. But if you've got a good Excel template that, and I would even say just Google, I mean, there's lots of ways now. Obviously, there's AI, and you could probably create one at ChatGPT or Claude or some of those. But even if you just search, like Google search for business accounting templates or business income and expenses templates, the likelihood is, like I myself on my website offer a free download for anyone who wants it of a business income and expenses tracker. And I'm sure there's other accountants out there who do that. So just if you don't know where to start, that would probably be my advice, like look online. So yeah, definitely Excel is not a bad starting point, but if your business is growing and you find that, it's been a month since you last looked at the Excel and now you have to go back and do it and it's going to take ages, then you probably need to move it into something a bit more sophisticated. And that's where I say, I preach a lot about Xero. I'm by no means a Xero affiliate. I just really find their system is one of the best out there. It's very intuitive, easy to use. You don't have to be an accountant or a bookkeeper to understand it. And they're constantly doing working with AI in order to kind of make things more efficient and streamlined. So there's Xero, but there's also QuickBooks, MyOb. There's a lot of different accounting platforms out there. But having one of those systems in place, what you can do is you directly link your bank account to it, and that would be obviously your business bank account. And this would apply to both sole traders, companies, or other structures. You would link your business bank account directly to Xero, and it just means that all transactions are then automatically coming into the system, and it will force you into a habit of attaching support, so invoices, receipts, records for business transaction, be it income or expenses. Because that's really where you want to get to for, like, your accounting software is going to be your audit trail and really your Bible for preparing your tax returns, be it quarterly BAS returns or your end of year tax returns. So it just means that everything then is in one place rather than, a spreadsheet with documents saved in your photos, documents saved in your emails where it's all over the place. It's just having everything together in one place. And the other thing that it will allow you to do is if you are GST registered, operating out of a spreadsheet becomes really difficult because, you need a system where it's going to, prompt you on whether or not it's GST free or GST chargeable on the expense or on the income. Whereas in a spreadsheet, you're prone to risk of error. versus say an accounting software like Xero or some of the others I mentioned.
Yeah, so good. And I use Xero myself, so another plug
Okay.
for that software. It's very easy to use. We've gone from
Absolutely.
Australia to a different country, and now we live in Malaysia, so we've used a Xero here as well, which is, it makes it,
Amazing,
it's very
yeah.
universal. But I still have flashbacks. I don't do my own accounts now because we've got an accountant on the team. But back then, because I was so busy, my husband would do all my best returns and everything. And I just remember every 3 months I would be like on his back, can you go in and do that?
Oh, yeah.
And just, allocate that, whether that's got GST or not. And that leads me, to the next thing about building in that habit of keeping on top of your numbers. And because I was so practitioner in the sense, trying to do everything, and tax was just the last thing, or bookkeeping was the last thing on my mind. And so we would do it at the end of every 3 months, which would take him a good day and a half to do it. So do you have any advice for business owners, to start early in terms of having really good habits with keeping on top of their numbers?
Yeah, so streamlining and automating as much as you can. And it can be just simple things like even, I'm an accountant, right? And I will fully admit that I'm always last to lodge my own tax return. I've done all my clients before that, but I'm always last to do my own, like bookkeeping, all of that. Because everybody finds that stuff really painful. But one very simple tip I've done is, because you're getting, say for subscriptions and things like that, like Microsoft, Adobe, whatever it is you're paying for, they will come to you via email into your inbox. What I've set up now is a number of rules in my email inbox. If an invoice comes in from Microsoft, for example, forward it directly into my Xero file. So Xero have a really good function where they've got a mailbox, and you send your invoices or receipts in there, and it will save them down as bills, and then you have to just go in and approve them. And it takes a while to get the accounting software there, but it becomes more and more intuitive the more you use it, because it's seeing recurring expenses and all of that coming through. So automatically, I don't need to worry about any of my expense invoices that come into my inbox. They just go directly into my Xero file and are sitting there for me to reconcile. I would probably say don't do the whole reactive approach of just when something is due, go in and do your bookkeeping, because the other thing is you're going to rush through it. And yes, Xero will make suggestions on how items should be reconciled or posted or, categorized within your file, but it's not always right. Like, you do need to definitely pay some attention to it. So I often say I'm a big believer in time blocking. I love doing it. So depending on when you kind of feel you're least productive on your business side of things, whether it's like Friday afternoon, Monday morning, whatever it is, just block an hour or two each week to just go into your Xero file, get it done. I'm like, listen to Charlyn's podcast, listen to some music, and just smash through that. So doing it every week and staying on top of it is really going to help. This might be something we talk about a bit further on, so I won't go into too much detail, but there's nothing wrong, I guess, with outsourcing this work. You're really good at what you do, and that is your passion, and you're not going to procrastinate, the work around your clinic or your services. So maybe accounting and finance just isn't your thing and will never be your thing, and you keep putting it off for a reason. So then maybe it's time to look into getting a bookkeeper on board or getting an accountant on board, whatever works best. And there's plenty of options for that. So, potentially it is something that you just outsource in the early days and you make peace with that and move on.
Yeah, make peace with that. I love that. It's recognizing, what we're good at and what really frustrates
you can't be good at everything, right? And as a small business owner, you just mentioned it there, we wear so many hats. It's like marketing, you're HR leader, you're on top of just running your business, it's everything. So something has to give, right? And I always say, think about the thing you dread the most and you hate doing, and maybe that's the thing that needs to be outsourced.
Yeah. Now, Jenny, one of the other things that came to my mind as you were talking about habit building and just going in once a week to keep up with things, a lot of our clients use different payment processes. Like, for example, if they use Kajabi for their course hosting, there is a Kajabi payments option where people can pay them directly through Kajabi. There's Stripe, there's PayPal. So there's multiple incomes coming in from different platform. So one thing that I wanted to add on to it is just make sure you have it all connected to Xero. So
yes,
it just automatically gets inputted in there.
Yeah, totally. Like I know I probably can't speak to Kajabi whether that links directly, but yeah, Stripe, PayPal, Square, I don't know if anybody would be using Square, but Zero has a lot of third-party app integrations. And if it doesn't, there's also alternatives out there. Like me personally, I use make.com. There's also Zapier, which is obviously probably the more popular one. They kind of act as that middleman to connect softwares that aren't directly linked. So as much as you can, it kind of comes back to the whole making the process as streamlined and automated as much as you can, because that will obviously then reduce your own manual effort and make it a lot cleaner and less time consuming for you.
Absolutely. So that's income. And, even talking about spending money on your business, whether it's paying bills or buying things. So I want to talk a little bit about deductions. So a lot of our clients, they work from home. They might have another job, but this could be their side gig or their full-time thing. They work from home, and so they've got an office desk, or some people still work on the kitchen desk. I've got a client who works from her laundry. So what sort of things can a small business owner claim to help with their deductions at the end of the year?
Yeah, so if I start on the piece, just because you mentioned it with working from home, so there's the working from home is definitely one you do not want to overlook if you are predominantly working from home. So there are two methods to claim your work from home deductions. There's what's called the fixed rate method, and that is where it's pretty straightforward. You keep a log of your hours that you've worked from home, and that's in the last couple of years, that's what the ATO have introduced. They were a bit more relaxed about the log during COVID times, but since 2023, I believe, they have mandated that you must keep a log of your hours worked from home in order to be able to claim this. But you keep your log of hours and you claim 70 cents per hour worked from home. And that will cover all of your home running costs like electricity, gas, Wi-Fi, phone, including your mobile phone and stationery and printing supplies. So keep that in mind. That's the most straightforward approach and requires the least amount, I guess, of record keeping and documentation. You don't need to necessarily keep your Wi-Fi, electricity bills as records. You just keep your working from home log and claim 70 cents per hour worked from home. Then there's the actual cost method. A lot of people, I guess, avoid claiming under this because the record keeping requirements are a lot more onerous than the working from home log. So in that case, what you need to do is keep records of your electricity, Wi-Fi, your telephone, gas, like any home running costs that you have. You need to keep a record of those bills throughout the year, and then you claim a portion of them based on your working from home allocation. Now, the ATO have made it very complicated. If you take electricity, for example, they have actually said that you need to calculate how many more kilowatts you use working from home versus, say, not working from home. So it just, from an admin and documentation point of view, they've made it very difficult for people to use that method. So generally people will stick with the fixed rate method because it's just the more straightforward of them both. The other things, I guess, to mention, one being, because you mentioned there about, people working in different places throughout the house, and believe me, I know. When you are a sole trader and, working under your ABN, and even if you're a company, there's obviously ways to claim this as well, you can claim what's called occupancy costs. And that's where you claim a portion of your rent or your mortgage repayments as a deduction in your tax return. General advice would be don't claim your mortgage. If you own your property, don't bother claiming it, because that is going to then have CGT, like capital gains tax impacts further down the line on your primary place of residence. And you kind of don't really want to mess with that exemption because it's very good. But if you are renting, for example, you can claim a portion of your rent as a business deduction if you have a designated area of work or a designated place of business in your house. So that's something to keep in mind. If you have like a specific office that you run your business from, you do maybe consultations, even if it's virtual consultations from that would be your home business, and therefore you can claim a portion of your rent as a tax deduction. Then other costs would be if you buy home office furniture during the year. So if it's like a new office desk or an office chair or a printer, as a sole trader or even a company, you have access to the instant asset write-off, which is in the current financial year up to $20,000 per asset is tax deductible. Now there's talk of that changing next tax year to $1,000, which is what it historically was. But yes, so that's something, that's a huge benefit for business owners, is where they can claim those higher value assets as a tax deduction. Then there's the kind of standard deductions where you've got your professional association fees. So if you pay professional membership fees, to APRA or other bodies, they can be deducted as part of your tax return. If you pay for subscriptions, so again, whether it's like learning subscriptions or Canva, Microsoft, Adobe, like those ones, Xero, obviously we just spoke about. And then if you engage a tax agent to do your tax return, or have done in previous years, if you've paid for those fees within the tax year, you can claim them as a deduction. Professional indemnity insurance, any charity donations that you've made during the year, if they're to a registered charity, they can be claimed as a tax deduction. And then there's self-education costs. So if you have undergone training, courses, webinars, or attended conferences that relate to the income you're currently generating, then you can claim those. Now there does need to be a direct link between your business and the course that you're doing, for example, in order to be able to claim that. So just keep that in mind.
So it can't be a hobby. So if I like sewing and I did a sewing course, then no.
I mean, if you can make the link, go for it. But
well, some people can get very creative for tax.
Absolutely.
But yeah, thank you for sharing about the deduction, because a lot of people don't know about these things, and so they leave a lot of money on the table, and unfortunately, the hard-earned money just goes back to tax, and we can keep more in our pocket. So it's very important to ask these questions and get to know what you can and can't claim legally.
Totally, yeah. And it comes back to the point as well around record keeping. If you've left it a year, if you kind of haven't looked at your financials from one tax year to the next, trying to go back and remember what you spent money on can be really difficult. So that's where that regular bookkeeping becomes really important, so you don't miss out on any deductions.
Absolutely. And one tip that I have is with receipts. So if you purchase like stationery, for example, and you have those paper receipts, they do tend to fade over time. And for record keeping, Jenny, we need to keep records for, is it up to 7 years?
5 years.
5 years. So what do we do with that?
So I say to people, keep it really, really simple. If you're not on an accounting software and it's like early days, I always tell my clients to create a separate album in your phone, like in your Photos app, and call it business receipts. And as soon as you take a photo, say you've come out of, JB Hi-Fi or something after buying a work-related ring light, whatever it is, camera, you just take a photo of that and save it into your business expenses photo folder in your phone. The other way that I would say is to email yourself the receipt, and again in your emails have a separate folder. So that's if you don't have an accounting software. There are a couple of tips, just keep it simple. And then you only need to keep electronic records. So as soon as you've taken that photo and saved it down, you can get rid of the physical receipt. The other tip is if you do have an accounting software, and I'm just going to refer to Xero, and Charlyn, you probably know about this if you're on it, they have an app called HubDoc, and it's really good for when you're on the go. So it's an app that's on your phone. You take a photo of the receipt and it automatically saves it within the HubDoc app, which is linked to your Xero. And then if you are doing it yourself or you have a bookkeeper, you just need to go in and allocate that as, computer equipment or whatever it is, and then it's saved into your Xero file. So definitely getting an electronic copy of those physical receipts as soon as you can.
Yeah, I use HubDoc as well, and it's super easy to use, so we won't have to worry about those paper receipts fading, because I learned that in my first year. All the mistakes that we make, and now we know.
I know, look, that's how we learn.
Yeah, that's it. Now, you talked about deductions. Now, I want to talk about attending live events. So we have a retreat for our clients coming up in June. So one of the questions I often get asked is this tax deductible? What about my flights, my accommodation, my food expenses and things? They're related to attending the event. So can you go into this a little bit more?
Yeah, absolutely. So if you are traveling and it's an overnight thing, or, for multiple nights, and it's for work or business purposes, so you are gaining something out of it. And when we look at expenses, deductions, there's kind of three main things. So it's that you can directly link it back to the income that you're earning. And when we say that, it's like, by doing this retreat, for example, what are you going to get from it? Well, you're going to, learn how to run your business better, and that's going to generate more income from you. So, there's obviously a clear direct link there. You yourself have obviously spent the money on it, which you have. And as long as you've paid for the retreat within the tax year, that's really where it comes down to the business deduction. And then you obviously haven't been reimbursed for it. That's more if you're employed. Unfortunately, when you're running a business, no one's paying you back. So yeah, look, that absolutely would be tax deductible. The one thing I would say is, if there is a personal element to that, so let's just say, for example, someone attends the retreat and they decide that, right, I'm going to stay, an extra week and fly my family over or whatever it is. You do need to ensure that you split any costs like flights, accommodation, food between your business versus personal use. So that extra week, you obviously wouldn't be claiming your full return flights because it wasn't all business related. It was part personal, part business related. But otherwise, if you are just solely attending that retreat and you are going to gain something from it for your business, then your flights, accommodation, your incidentals, which are like your food and other costs that you have, would be tax deductible.
Mm-hmm. Okay, got it. So again, keep really good records of what you're spending, your meals and everything, and think about, I suppose one thing is, a lot of people might work when they go on retreats, like have client calls and things. So that is considered work as well, even though it's in a different location. Is that correct?
Absolutely. And Charlyn, you made a good point there around the records, because that's really what it's going to come down to. So if you are ever reviewed or audited and that was an expense that was being questioned, what the ATO would generally look for is obviously confirmation of your flights and accommodation and the transactions in your bank account. But they would also want to see that this was legitimately related to your business. So I would say, if you've got a printout or a download from your calendar where it's showing, the different sessions you're attending throughout the day, or the different meetings that potentially you were having with clients while you were there virtually. And actually, I know it sounds a bit ridiculous, but keeping a travel diary or some sort of log of how you spent your days will be really crucial as well. So, you just want to be able to back up that this was in fact a business related trip. So as much evidence as you have to support that will really stand to you.
Mm. Is it common that businesses get audited? And what type of businesses do ATO tend to audit for small businesses?
It's a real mixed bag. It's a really difficult question. It's a question I get answered a lot, even from just individuals. Yeah, I mean, one thing I'd say is the ATO systems are definitely getting a lot more sophisticated now. They have a lot more access to information. Like, I remember even years ago, they didn't have any visibility around like Stripe and Square receipts. Whereas now, if I'm doing sole trader tax return for a sole trader or an ABN operator, I can see on their pre-fill information that, they've received X amount through Square and Stripe and all of that. So all of that is now visible by the ATO now. There's just like some red flags they'll see, right? Like, they compare generally across categories of industry. So, if you're in a particular industry and your deductions look a lot higher than other businesses within that industry, that's going to raise a red flag in their system. Or if year on year, your income is quite similar, but your expenses have like skyrocketed, that's something that might raise questions. So there's probably just certain kind of red flags to watch out for. But other than that, it's a bit of a gamble as to who they're going to choose. There's there's no formula to it, but they definitely do have a lot more visibility now than they used to.
Even bank interest as well. I was surprised that my accountant knew all of that before I went in to see him.
Absolutely, yeah. And investments, like, crypto is obviously relatively new in the grand scheme of things. And now again, on the ATO pre-fill information for clients, we can see whether or not the client holds crypto or whether they sold it during the years. And that again is only really something that's come out in the last few years.
So the ATO evolves really quickly. And I think at the end of the day, it can be scary, but we just need to do what we can. Keep good documentation, make sure you check what you can and can't claim with an accountant, even just book in a one-off session with them just to clarify things. And if you do need help to set it up, then get someone to help you set it up or maintain it if you have the budget for it. But Jenny, one thing I wanted to ask is about superannuation, because when you're an employee, you don't have to think about it. Your employer will contribute that 9%. But what if you're a sole trader or, you're on your own? So do you still contribute to super?
So yeah, looking at sole trader in particular, you don't have to. There's no obligation, and you're exactly right. If you're employed, and now the superannuation rate is 12% of your base salary, so
Gone
it's
up
huge,
since
right?
I left.
So if so if you're employed, that's automatically going into your super, which is amazing, right? For the goal that we're all trying to get to, which is retirement. But yeah, when you're a sole trader, there's no obligation for you to contribute into your super. That is not to say you don't do it. Obviously, in those first few years of business where, you are, I guess, being a bit more conservative and you want to kind of keep the money in the business, let it grow, all of that, it's probably less, I guess, on your radar and less of a priority for you. But as your business starts to grow, I would say it's good to get in the habit of contributing into your super. Personal super contributions as a sole trader are tax deductible, so that's something to keep in mind. So, if the beauty of it is, if you, let's just say at the end of the year, sorry, I'm backtrack a bit, but each year as an individual, and this is based on current legislation, we have $30,000 of personal super contributions that we can pay into our super fund each year. The beauty of superannuation is in the fund, it's only taxed 15%. When you compare that to individual personal tax rates, as we mentioned before, are up to 45% plus 2% Medicare. That's a huge potential tax saving where, you're only paying 15% tax in the fund versus the personal tax rate of potentially as high as 45%. So if you say at the end of the year are doing, now it needs to be, just to keep in mind, it does need to be paid into the fund before the 30th of June for this to actually be of benefit. But we run a number of tax planning sessions for our clients around this time of year, so kind of any time from April through to June. And we forecast out, this is a useful exercise to do, we forecast out what their profit position or taxable income position is going to look like as at the end of June, and then put in place a number of strategies to help bring that tax down before the 30th of June. The main strategy is going to be around superannuation. So really maximizing that cap of 30 grand. Now that's not to say you're going to put 30,000 in, but even if you can put 5,000 into your super before the 30th of June, or even $1,000, whatever it is, you're going to be able to claim that as a tax deduction in your return and potentially save yourself, up to 30% plus of tax. So that is one of the key tax planning strategies that we would implement for clients if they're in a cash flow position to contribute into their super. That is one we'd be advising. The other thing as well to note with those concessional superannuation contributions, which is that $30,000 cap, you get what's called carry forward concessional contributions, and that's for a period of 5 years. So if you haven't maxed out that $30,000 over the last 5 years, you can actually carry them forward and have access then to additional contributions to make in the year. So it really is a great tax planning strategy. And yeah, I would always say if you've got some excess cash at the end of the year and want to bring your tax down, then look at contributing to your super. Because the other thing as well is, you don't want to continue operating your business and, obviously doing really well, but then you come to retirement age and there's nothing in the pot. So yeah, it is one thing just to be mindful of, as well as it just, being a great tax saver as well.
Yeah, I think, one thing that I always talk to my clients about is thinking about how you can make your money grow and work for you rather than just constantly working and trading your time for money. And you show up to work, you make, however much it is. But ultimately, as you grow your business, you want to think about how to optimize your tax savings, how to make sure you have enough saved for retirement. You've got assets that you are the wealth portfolio that you're building as well. And these are all things that we don't think about until something happens.
Totally, yeah.
Yeah,
absolutely.
and that session sounds really valuable. So Jenny, talk us through, someone's thinking about hiring an accountant, but they're not sure, do they need a bookkeeper first? Can you step us through when to hire who first?
Yeah, I mean, people often think they're quite similar, bookkeeper and accountant. But And they are. Look, I mean, we at Air Consulting, we offer all of the services. So bookkeeping, payroll, accounting, tax. So that would be good to get it under one umbrella, but they are quite distinct in terms of the services that they offer. So a bookkeeper, for example, that's going to be someone who is really there for your day-to-day transactional and operational work. So that is someone who's making sure that all of your transactions coming through your zero file are coded correctly for GST purposes and for income tax purposes. And, it's very crucial to have a good bookkeeper on your side. They're going to keep on top of you around making sure that, you're uploading your support on time and, it's not 3 months later and you have to give your file over to your accountant, it's going to do your BAS and nothing's been reconciled. So they should really be keeping on top of you and month on month reconciling your financials or, kind of making sure everything is allocated correctly. So I would say the bookkeeper is really the hands-on, gets into the detail and is there for the day-to-day transactional work. Then your accountant is the person who's going to be there to look at what the bookkeeper has done, not necessarily look at it from like a reviewing it, but looking at the outcome of your P&L and your balance sheets or your profit and loss of your balance sheet, and looking at the health of your business and of your cash flow. So an accountant is going to come in more with a strategic lens and say to you, you're potentially spending too much in this section, maybe you want to scale it back, or your revenue growth was, a lot better in this quarter than last quarter. Is that because of your marketing that you did? So they'll really look at it at like more an analytical lens. And as well as that, then usually most accountants will be tax agents as well. So they will be the people who will lodge your quarterly BAS returns. I mean, some bookkeepers do BAS returns as well. They'll lodge your quarterly returns and lodge your end of year tax returns. The other thing you want your accountant to do, which is what I just mentioned earlier, are those like tax planning sessions. I have a lot of clients who come to me and feel quite intimidated by their accountant or tax agent, especially, female founded businesses where they feel like they can't ask their accountant questions because they're made feel stupid, which is, I hate hearing that. And that's really where, you should not be in that position, right? Like, as we mentioned before, if you're working in the dietitian or nutrition space, finance is not going to be your thing, like nor is dietitian or nutrition expertise my thing. So it's like you kind of, you stay in your lane, you do what you're passionate and really good at. So you should have an accountant who's on your side and really explaining your numbers to you so that any kind of tax bills, whether it's quarterly or, annually, don't come as a surprise. You should know well in advance of a lodgement happening, how much tax you owe and why the outcome is the way it is. So yeah, I guess, sorry, I feel like I've gone off track a little bit in terms of your original question, but I get quite passionate about this because I do hear so many people who feel like they can't have a conversation with their accountant. And if that's the case, you're absolutely not with the right person because they should be on your side. So yeah, so I would say Bookkeeper is definitely a great place to start, but an accountant and a bookkeeper should really work together in order for you to get a comprehensive view of how your business is performing.
Mm-hmm. And I absolutely agree with making sure that you talk to different people and see what your options are, because at the end of the day, these are all very technical jargons and you don't want to be in that position of being too afraid to ask questions and are missing something really important. So find someone that you can connect with. And Jenny, you're so approachable and you've broken down everything into such clear and easy to understand terms. And I just wish that there are more people like you out there, more accountants like you, that women can feel confident talking about these money topics with. Jenny, just one really quick question around the different titles, because there's CPA and then different titles for those who can submit tax BAS statements as well. Can you just talk us through that?
Yeah, so you have to be either a registered BAS agent, so BAS business activity statements, Sorry, I feel like I've been saying that the whole podcast, but you have to be a registered BAS agent or a registered tax agent with the Tax Practitioners Board, that's TPB, here in Australia, in order to be able to lodge returns. Now, anyone can go onto the Tax Practitioners Board website and they've actually got a practitioners list there. And you can search for any individual, like you could look up Jenny Theodore or Air Consulting and verify or validate that I am a registered tax agent. So that is a useful one to do. And that's probably more on like the individual sole trader side, because there are a lot of, I'm going to say, dodgy tax agents out there, you know, and particularly at tax time, they come out of the woodwork. So yeah, I would always validate against that register just to make sure that you are dealing with a legitimate tax agent. Then there's, so there's CPA and CA are the main bodies. So CA is Chartered Accountant, CPA is Certified Public Accountant, and they are the qualifications for accountants, not necessarily tax agents, because not all accountants work in public practice. Like some can work in corporate as well, obviously.
Got it. Wonderful. Thank you for explaining that. And it sounds like a lot of the work that you guys do can be done online, especially with the Bookkeeper. So my question to you is, if you're based in Sydney or Queensland, Jenny?
Yes, based in Sydney, yes.
Sydney, wonderful. So if we have someone in Perth, can they work with you?
Absolutely. So, I mean, the beauty nowadays is everything can be done virtually, right? So, yeah, a lot of my clients who are even Sydney based, we tend to just meet virtually. So everything can be done online in terms of, you know, getting access obviously to your software and all of that. But I am a big believer in meeting and talking, well, face to face virtually. But, you know, I'm not one of these accountants who you'll just get emails from with like, you owe this amount, like you'll always be able to talk to me. I mean, a lot of my clients, I WhatsApp or message on Instagram, so it definitely very accessible, probably too accessible sometimes.
Too accessible.
Yeah, I know. It's like the pros and cons. But yeah, so work with clients all over Australia, which is fantastic. And obviously with the Irish accent, there's clients based in Ireland as well. So it's
right. So are you registered there as well?
I'm not, but there's people who have maybe moved back home but still own properties here, for example, or operate a portion of their business here. So yeah.
I see. But it's all, so someone has to be an Australian-based registered business to be working with you.
Yes. Yes. I mean, an Australian, where they have Australian operations. Yes. Yeah.
Mm-hmm. Yeah. And paying Australian taxes. So just wanted to clarify this because we've got listeners from the States and other countries as well. So you want to look for someone in your local country to help you with that.
Yeah. So this would be for Australian-based businesses. Absolutely. Yes.
Okay, wonderful, great. Now, Jenny, just one last question. We're approaching June 30th, and so a lot of people are thinking about getting their paperwork together. And sometimes one of the biggest panic they get is you get to the end of the financial year and you realize, oh my gosh, I got to pay this much back in tax to the government. And sometimes it can be quite unexpected as well. So is there any advice that you have to businesses in terms of setting aside a amount for tax so you don't get that sticker shock at the end of the year?
Oh, and it's so common. It really is. Look, it's one of those things. So we mentioned earlier about setting up the separate bank account. My advice is usually, and I probably should have mentioned that actually at the time, but my advice is usually to set up two separate bank accounts. So you've got your transactional account and then you've got a savings account. And that savings account is purely for tax saving. Obviously, you can have a number of different accounts if you want, but they're the two key ones that you would need. So when you receive, what I would usually advise clients is when you receive an invoice or income, put aside, and this is a very ballpark figure, so it does obviously depend on, you know, what your taxable profit or your taxable income and your profit is, but you put aside 25 to 30% of everything you bring in into a separate savings account for your end of year tax. The other important thing is if you are GST registered, that GST is never going to be income for you and is not your money to spend. So if you have charged GST on like a digital product or supplements, whatever it is, once you receive payment for that, put that GST portion into that same savings account. Now, some people have separate tax and GST accounts. Also fine to just put it into one, but just making sure you're putting aside or you have a bucket where you're saving for tax. Now, the beauty is by putting aside, 25% of your income into that separate account, obviously you're going to have expenses going against that. So you're usually going to have that kind of extra buffer then or extra savings put aside because your tax bill will likely be lower. But, that's where then you consider, okay, is there something I want to invest in my business? Maybe do like a training course or put some into my superannuation, whatever it is. But really having that separate savings account where you're consistently, and, I say to clients, do it at the end of each week. Like look at your income and put aside a portion of it. Do it each month, whatever kind of works best for you. But it will just avoid you getting, as you said, that sticker shock when your tax bill comes in, because you'll hear it from business owners all the time of, I pay so much tax. And you know what, you would have, particularly sole traders, right, because you are subject to the personal individual tax rates. If you were employed, you would have been paying the same amount of tax. But because it's coming out of your paycheck before you get it, you just never see it. You never really kind of register how much you've paid. So it's just when you actually have to physically pay that money over, it does become a bit of a shock. And actually on that point, that's worth noting is, because it's a question I get all the time from business owners. If let's just say you're in your first couple of years of operating your business and you've made a profit, you've had to pay some tax. What the ATO will generally do is put you onto the PAYG installment system. And what that actually is a quote, they, I guess enforce you probably sounds a bit harsh, but they're encouraging you to make quarterly payments towards your end of year tax. So it's like prepaying a portion of your tax. They will calculate those installments based on your latest lodged tax return. So, if you had a bill of say $8,000, you would then be on probably slightly over because they add CPI as well, but you'd be on say $2,000 a month of quarterly installments that they suggest you should prepay. And that can be a really good idea from a cash flow perspective if you're someone who is quite, let's just say, not so diligent in terms of saving for tax. By actually physically making those payments over to the ATO, it softens the blow then come tax time at the end of the year where you've already prepaid a portion of it. And if you've overpaid those installments, you'll get a refund. If you've underpaid, then you'll just pay the balance that's owing when you lodge your tax return. So that can be a very proactive way to prepay some of your tax during the year.
Amazing. Thank you so much for sharing that. Something to really think about. And I think planning at the end of the day and setting aside money is going to be a really good financial habit to get into for your business, because as business owners, we can't ignore those things. We got to think about it. And the more you can keep on top of it and set aside that time each week or each month, like Jenny has said, and having a really good system to track your income and expenses, then you are going to set yourself up for less of a shock at the end of the year. But, at the end of the day, it's still really good to talk to an accountant and just to understand and do a forecast of your financial situation as well. We didn't really talk about this, like having a trust, a family trust, which is another layer that you could get to before a company. Did you have anything that you want to say about that, Jenny?
No, well, I mean, there's a lot I could say on it, and it's probably getting quite specific. But one thing I actually don't think I mentioned earlier in the conversation, and I probably should have when we were talking about the company, but it may be something you're already familiar with, Charlyn, and some of your audience is what's called personal services income. Let's just say you're set up as a company structure. When you're generating income as an individual under a company structure, and that income is predominantly as a result of your skills and your labor, which would be the case for most dietitians and nutritionists, that can actually be subject to what's called personal services income rules, which can, and I mean, there's more to it, like this is a very summarized version, but it can almost make your company structure redundant, because what the ATO says is, well, that income is actually personal income because you generated it from using your skills and your knowledge. Therefore, rather than it being taxed at company tax rates, that should actually all the profit of the business should be fully allocated to you as an individual, and you're back to square one at being taxed at the individual tax rates. So the ATO have a really useful tool on their website. It's called the Personal Services Income Tool. If anyone is unsure whether they fall into that bucket, I would strongly advise you take that kind of test or go through the steps that they have set out in that tool to determine whether that would apply to you. Because, I guess there are things you need to consider when setting up a structure. You don't want to go down the path of setting up a company structure when you're actually not going to get any benefit from it. But your point to the family trust, I mean, trusts are a fantastic way to distribute income out and avail of lower tax rates. So oftentimes what you'll get is you'll have a business operating as a company, and then the trust, like the family trust structure, is actually the shareholder of that company. So that's one of the most kind of tax efficient structures that you can set up for a business.
And there's so many ways, to be honest. Like, it took me so long to get my head around it. But like I said, again, go back to your accountant and ask those questions, because they can help you to work out what's the best way for your business, and whether you're in a position to hire. A lot of our clients, they grow their business and then they start to think about hiring, getting a salaried worker versus contractor, so there's so many things around that. So it's good to get their advice on that. But Jenny, I just wanted you to quickly explain, if someone wanted to get in touch with you, what's the best way and what is it like working with your company?
Yeah, so as I said, I'm very accessible. You will find me on Instagram. So it's at air_consulting. And then there's also my website, which is www.airconsulting.com.au. And I've got, contact forms on there. But so different ways to reach out to me. And as I said, I look after a bit of everything. It's really a one-stop shop. So bookkeeping, payroll, accounting, and then tax as well. And look, you've probably gotten a bit of a vibe as to what I'm like, but I really just like to break down those barriers and remove all jargon when talking about accounting and finance and tax, because it doesn't need to be as complicated as sometimes it is made out to be. And just, I want clients of mine to feel comfortable to be able to reach out to me with any questions they have, and just really understand how their business is performing, rather than getting that dreaded tax bill every quarter or end of year.
Mm-hmm. Well, Jenny, you're a wealth of knowledge, and it's a pleasure having you on the podcast. Thank you so much for your generosity and sharing all your knowledge as well. But if someone wants to learn more, I will be sure to link your website, your Instagram on there. And you talked about a tracker tool as well for profit income. So I'll put that on the show notes too. Thank you so much for your time, Jenny.
Thank you, Charlyn. It's been a pleasure.
Yeah, and to our listeners, thank you so much for tuning in this week. We'll see you back here for next week's episode. Take care.